Hey guys, welcome back to the channel. Today we're videoing at Sugar Queen Creamery with some good ice cream. And so I'm going to show you a little bit about this area. This is a place in South Knoxville. It's really good ice cream. It's great for if you want to get out for a little treat. And we'll show you a little bit more about that. And I'll give you some information in the comments below about where it can be found. Otherwise, we're going to get into our video right now, talking about the pre-approval process. All right, now that we've had our ice cream, it's time to talk about the first step in the home buying process. And that first step is getting a pre-approval. You need to get a pre-approval for your loan. And why is that the first step? Well, you need to have a budget, right? You need to know what you're looking at. You might be paying a certain amount in rent, say $1,800 a month in rent, but that doesn't mean that you're going to be approved for $1,800 a month by a lender to buy a home. And so, or you could be approved for more, right? So when we go out and buy a car, when we go buy a computer, we go on vacation, usually we have a budget, right? Vacation doesn't always have a budget, but we have a price point in mind. Well, most of us aren't going to be paying cash, right? We're not paying cash for a house. We'll pay cash for a car. We'll pay cash for these other things. We're not paying cash for a house. We don't have $400,000 in cash. We don't have $300,000 in cash, whatever the case may be. We might have saved up for a down payment, but we don't necessarily have all that money, so we need to borrow. So we have to talk to a lender to find out how much money are they going to give us. And so when you apply for a loan, there's certain guidelines that come into place in terms of how much debt you can have, what your credit is, how long you've been at your job, whether or not you're self-employed. A lot of different factors go into whether or not they'll give you a loan and how much they'll give you. And so, in many ways, you're not really buying the purchase price, you're buying the monthly payment. And there's a lot of factors that go into your monthly payment, from property tax, homeowners insurance, just all kinds of different things that need to be accounted for, which is why you need to talk to a lender and get a pre-approval. So let's talk about the first aspect of this, though, which is credit. And I've heard a lot of people say they have good credit or they've got bad credit, and that's kind of a relative term depending on your situation. But one of the reasons that you want to get pre-approved is to find out if everything on your credit report is supposed to be there. I've had clients who've had issues that came up on their credit report they didn't know were there, and they needed to get them figured out. And so getting your pre-approval done is going to allow you to start working on that and make sure everything is good the way that it needs to be. There are other times when, maybe your credit's just lower than you thought it was, or maybe it's higher than you thought it was, and you can get started earlier. So that's one of the reasons you want to get that pre-approval done early, is so you can continue to set that proper foundation. And so when you think about credit scores, though, we all have different terms, like I said, for a low credit score or high credit score. Well, there are programs for as low as like 580. And so just because you are in the 500s doesn't necessarily mean you can't get a loan. And just because you're in the 600s doesn't mean you've got perfect credit or great credit or whatever. But also along with that, your different credit scores, the different tiers, will give you better interest rates. And it's not like just by going up by 5 points will necessarily increase it. It's a tier level. So one lender might have a tier at 640, and then 680, and then 720 or something. Another lender might be 620, 680, 760, right? So they have different tiers depending on the lender, and depending on the loan type, if you're FHA, if you're conventional, USDA, different things like that. And so don't be maybe hyper concerned about it, but when you talk to your lender might say, hey, you're at 620. If we can get you bumped to 640, that will give you a cut in interest rate. And this is how you can get your credit up to 640. So again, this is the reason to have that pre-approval as that first step. Now, these are not, again, they're not hard and fast tiers, right? So I don't want you thinking right now, oh, I need to get to 640 or something else. Talk to the lender first. Now, there's the different loan types that you might be approved for. You might only be approved FHA. There's certain reasons for that. You might be approved to go conventional. If you're military, you've got VA benefits, and you might be able to do a VA loan, and or USDA. USDA is a zero down product. There's also jumbo loans, and there's also a whole host of other things that they're called portfolio products that individual banks or credit unions might have. But you also have down payment assistance programs. And so if you don't have a down payment, but you feel like you make good money and you can afford a certain, I can afford $2,200 a month. I just don't have any money saved up. There's down payment assistance programs. So there's a lot of different options for you in that regard, that, not everybody fits into one system. So when you're looking at an advertisement or a loan for a loan product, let's say, where they are advertising a certain interest rate, typically that's conventional, 20% down with like a 780 credit score, right? So you don't necessarily want to just, oh, I'm going to go here to this bank and because of this or whatever. You got to know what product they're selling and what product do you qualify for. You may not qualify for that product. And so that's why it's important to talk to a lender. Now let's talk about real dollars here too. Again, like I mentioned earlier, your monthly payment is a whole variety of things. It's your principal, it's your interest, and also your homeowner's insurance. And if there's a homeowners association, your homeowner's dues, your property taxes, okay? A lot of different factors that go into it. And so something to be aware of is just because you see this home over here, and this is a real example that I've looked up. It's $490,000 for this house, but this house 5 minutes away is $475,000. Well, when you calculate property taxes and everything, in the end, the $490,000 house is actually cheaper by $16 a month. And so if you really want a comparison, we need to be looking at all these things. And so just because the lender says you're approved at $475,000, that doesn't mean it's just $475,000. It could actually maybe be up to $500,000, depending on if there's homeowners or what the homeowner's insurance is, what your property taxes are, all that sort of stuff. But maybe you could only get something for $465,000. Again, depending on the location, and there's different factors. And so that's why I say we're shopping for a monthly payment. We're not necessarily shopping at a price, but we do need a ballpark figure, right? That what the lender gives us, says that's $475,000. That gives us a ballpark to work with. And if we're at the top of your approval, it's something we need to know, because we don't want to get your hopes up on this house simply to not be able to buy the house, right? And so when looking at homes, yes, we need that overall number, but we need to remember to take into consideration homeowners dues, property taxes, your homeowner's insurance, a variety, and if there's anything else. If you're in a flood area and you need flood insurance, that's going to affect things too. Now, how do you find a lender? Well, if you've already got a good relationship with a lender, awesome. That could be a great opportunity for you. If you've got a great real estate agent who is referring you a lender, typically that's because they've worked with them and they've had good experience with them. They probably have a good reason for recommending them, because real estate agents don't get paid until it closes, and if the lender can't close, nobody gets paid. So we want this to close. We want to help you accomplish your goal of buying the home. And if the loan officer can't get it closed, we don't want to work with them, So also, though, on that note, a quick fact for you: real estate agents cannot get any kind of kickbacks from lenders. All right, we can't get kickbacks from anybody, really. We only get referral fees from other real estate agents, but we cannot get anything from a lender. So in referring a lender, it's not because, oh, we're going to get an extra $100 from them. Nope, we can't get anything from them. We simply referring them because they're good at what they do. We get the job done. So if you want to find a good lender, what I suggest, number one, you want someone that communicates. This is so important. You want someone who's going to explain your product to you, who's going to explain the process, who's going to communicate the way you need to be communicated with. Do you like to text? Do you like email? Do you like phone calls? You want someone who is going to do it and do it in a way that you understand. I came across a seller one time in a transaction that their lender, when they bought, did not explain to them that because they did down payment assistance, that they had a silent second loan. And this silent second, it was a $6,000 loan. They didn't have to pay it off. They didn't have to pay on it until they sold the home or refinanced. Well, they were selling the home. Well, I mean, they sold the home, or after 30 years, they didn't have to pay on it. Once selling the home, all of a sudden they're getting $6,000 less than they thought they were because they had to pay this off, and their lender never told them that. So again, this is why communication is so important. Availability. When you're out looking at homes on a Saturday and you need to get your pre-approval updated, it's okay if it's first thing Monday morning, but it needs to be first thing Monday morning. So, if you're turning an offer in on Sunday and you need to get them the extra documents so they can make a decision, are they available? Are they available, to answer questions? Are they available during the transaction? There's going to be issues that come up. Are you going to be able to talk to them at 7 o'clock in the evening or at 7 o'clock in the morning, before you go to work or whatever? I'm talking with someone right now, and they work from 7:30 p.m. to 7:30 a.m., right? And then they go to bed. And so there's kind of a window that we can chat. Is your lender going to be available to chat, to reach out, to talk to you, to help you? There's been so many times that, people just don't respond in this business, and I don't know why that is, but they need to have that availability. Third, you need connection. You're going to be sharing your life story, so to speak, with them. They're going to see all your finances. They're going to see all your debts, but also you're going to have these issues come up in a transaction. Every transaction has issues. All right. I've had cash transactions have problems, and it wasn't always the buyer and seller. Sometimes it was the title company. But it doesn't matter. Every transaction has an issue that comes up. You need to have someone that you connect with, that you know and feel comfortable with, that they're going to work hard for you to accomplish these things. You need somebody that you're confident in to be able to do these things. And so in the conversations you have with a lender, you need to say, do I feel a connection here? Do I feel like I can talk with them, and are they going to communicate well and be available? And lastly, ability to close. Now, the ability to close, that may not be something that you can actually really discern, other than asking them, how many loans have you closed in the last 6 months? How many loans didn't close in the last 6 months? Why didn't they close? What were the issues? It's okay to ask these questions, and just try to listen to what they're saying and what they're talking about, and if they were referred to you by somebody and you're asking these questions, try to understand it. And there are definitely times when it is not the loan officer's fault. I mean, I've had times where clients or potential clients ended up, I wouldn't say they lied about their income, but they said they worked 40 hours a week, which they did, but they weren't guaranteed 40 hours a week. They were guaranteed 20 hours a week. And so the lender had to work off 20 hours a week. They were no longer qualified. Okay, so that's not the loan officer's fault. But you want to ask those questions to find out, are they closing loans? Do they know do they have that ability to get it done? And, there's a reason that most real estate agents don't recommend, Rocket Mortgage and the big banks. They just don't have a good reputation for closing. And that's the short and condensed version of it. Anytime that I've had an issue with a loan, typically it's been the big banks. And don't ask me why, but that's, cause I really don't know, because they don't explain it to me, but that's been my experience. Now notice what I didn't say. I didn't say your lender choice should involve your interest rate. Okay. And that's because interest rates flex all the time, and you can always refinance. But if you don't close on that home, what are you going to refinance? But also, a 0.125 difference, a quarter point difference, isn't going to make a huge difference in your monthly payment. But if you go with this other lender because, oh, it's a quarter point less, but then they take an extra 2 weeks to close because they messed up, then now you got to pay another month's rent. So what's that costing? Another $1,500, another $2,000. You've got to pay another month for your storage unit, $500, $300. Trying to save a little bit here for somebody who's not able to provide the service that you need, or if they're not a well-respected lender, Rocket Mortgage, and you're in multiple offer situation, you may not get the house. The seller and the agent may go, we don't want to deal with that. We'll take this other offer over here. And so interest rates are not the end-all be-all. I know it feels like that sometimes, but they really aren't. And the right lender is going to be able to make something work for you. So to summarize this, and in conclusion, your first step is always getting a pre-approval. And in doing that, you need to find a loan officer that you connect with, that they will communicate, they'll be available, and that they're going to have the ability to close on a property, on your loan for you. And maybe you got to talk to 2 or 3 lenders, and that's okay. Just be upfront with them. Say, hey, I am qualifying lenders right now. I want to ask you some questions. I want to see who I want to work with to get my pre-approval. All right? That's okay. But you want to do that up front. Don't do that after you've already got an offer accepted. Oh, I got a pre-approval, got an offer accepted. Now I'm going to check, compare. Like, that's the wrong time to do it because you're on a clock as soon as you get your purchase and sale agreement signed. So the lender is vitally important, just like your agent is important. And so I would highly recommend you get a pre-approval now, start talking to that lender now. They can start helping you through any kind of credit issues or things like that. And if there's, sorry, an airplane's going overhead. But if there's any issues that come up, they'll help you through those, and you continue to build that relationship with them. You continue to build that connection to further your confidence in them and your being comfortable with them to get the job done when that time comes. So I hope this has been helpful for you. And as always, if you're local to the greater Knoxville area and you want to meet up for coffee, chat, I would love to meet up with you. If you're not local, you've got questions, feel free to reach out anyways. I'm more than happy to chat with you, and I can probably refer you to a great real estate agent, perhaps a lender in your area. And otherwise, I will look forward to seeing you on the next video. Have a good day.